students, welcome to Accounting 1329, Payroll and Business Tax Accounting. This is Dr. Mercado speaking. I hope all of you are having a fabulous week. We are going to be finalizing Chapter 6, which deals with analyzing and journalizing payroll. Now, in this particular lecture, I am going to be covering Problem 6-13A. Okay, so let me go ahead and jump over to the problem. It's kind of lengthy. So it says, in Oregon, employers who are covered by the state workers' compensation law withhold employee contributions from the wages of covered employees for the workers' benefit fund at the rate of 1.1 cent for each hour or part of an hour that the worker is employed. Every covered employer is also assessed 1.1 cents per hour for each worker employed for each hour. So the employee pitches in 1.1 cent, the employer pitches in 1.1 cent. Okay? The employee contributions for workers' compensations are collected monthly, quarterly, or annually by the employer's insurance carrier according to a schedule agreed upon by the employer and the carrier. The insurance carrier remits the contributions to the state's workers' compensation department. Cortez Company, a covered employer in Oregon, turns over the employer-employee workers' compensation contributions to its insurance carrier by the 15th of each month for the preceding month. During the month of July, the number of full-time employee hours worked by the company's employees was 8,270, and the amount of the part-time employee hours was 1,950. Okay, now we have our first requirement. The amount of it says the amount the company should have withheld from its full and part-time employees during the month of July for workers' compensation insurance. So we have to do a little calculation here, okay? So let me go ahead and do aerial. Okay. So, requirement A. Okay. So, for requirement A, we have to do a calculation. First, we're going to bring in our full-time employees. Okay. So, how many hours did my full-time employees work? It says here that the full-time employees worked 8,270 hours. Okay. Next, we have our part-time employees. And our part-time employees worked 1,950 hours. So the total hours, we're going to add those two together. And that gives me 10,220. Okay? That is the number of hours that both my full-time and my part-time employees worked. Now my contribution rate is 1.1%. Okay? 1.1 right here. 1.1 cent. Okay? So I'm going to go ahead and I'm going to multiply. Okay? I'm going to multiply my 10,220 times my 1.1%, and that gives me $112.42. Okay? That is the amount that we're going to be withholding from the employees' paychecks. Okay? $112.42. Okay? That is requirement A. Okay? Now requirement B. Requirement B asks us, what is the title you would give the general ledger liability account to which the amount withheld from the employee's earnings would be credited? Okay. Now you have several options here. The main option would be your workers' compensation insurance payable account. Okay. Or you can have workers' compensation insurance collected. That way we know it's money that's been collected for insurance. Or we could do workers' compensation insurance withheld. Now these are some options provided, but I would recommend that we stick with our payable account, so I recommend we use the workers' compensation insurance payable account, okay? But you do have the flexibility to use whatever title you want as long as it's being used for the correct purpose. Okay, that is the whole. We have to support what are we putting into that account. Well, we're putting our workers' compensation insurance, and I misspelled insurance, guys. Insurance right there. Okay, insurance. There we are. Okay. So I would recommend we stick with workers' compensation insurance payable to align itself with the rest of our payable accounts. Okay. Now, requirement C. They're being asked to journalize the entry on July the 31st to record the employer's liability for workers' compensation insurance for the month. Okay, so this is the employer's portion. Okay, so we're going to have workers. Well, let me put here like a little title, debit, credit. Okay, it's kind of like a little journal. That way it looks a little bit neater. Okay. Okay, there we go. Okay, so the title we're going to use is Workers' Compensation Insurance Expense. Okay. And the amount for the expense is basically the same thing for your employee than for your employer. It's the 1.1, okay, in this particular example. So you just need to be careful on the state that you're working on that the rate for both the employee and the employer are the same, which in this case it is. We've already done the calculation, so we know that we have to pay out $112.42, okay? So that is my debit, and I'm going to go ahead and I'm going to put this money into my workers' compensation insurance payable account, okay, of $112.42. Okay, so it's going to be an expense for the company, so of $112.42, which we calculated up here, and we're going to put it into a payable because we need to pay that out at a future point in time. Okay, of $112.42. Okay, so that is your requirement C, and this is the amount of the employer's liability. Okay, so the top is basically it's the same calculation for both because it's the same rate for both. Okay, now letter D. Okay, journalize the entry on August the 15th to record payment to the insurance carrier. So now we're paying our insurance carrier. We're taking the money out of the payable where we had put it. So when we put money in, we credit. So if I'm going to take the money out, I would need to debit my payable, and then I'm going to cut them a check for the amount, okay, that I'm going to provide to them. Okay. Let me copy this. That way, there we go. So we are taking money out of our payable. So when we put money in with credit, if I need to take money out, I would have to debit. So I'm going to go ahead and I'm going to debit my workers' compensation insurance. There we go. Insurance payable. Okay. Now this is going to be $112.42 the employee portion plus $112.42 the employer portion. Okay. So the amount that we're going to take out of the account is $112.42 plus $112.42. That'll be $224.84. Okay. $224.84. That is the amount I'm going to take out of the account. That's the amount that you should have in the account. You've got the employee's portion and the employer's portion. Okay. And then what are we going to do? Well, we're going to send them a check. So I'm going to cut them a check. That means my cash goes down because I'm going to issue a check for $224.84. Okay. So these are the 4 requirements: A, B, C, and D. Okay. And just make sure that you be careful on your rates. Make sure that when you're calculating, you're using the correct rate. And these are the entries that you need to make to satisfy the requirement. Okay. Very straightforward problem. It's just a matter of doing some basic calculations. That way we can employ that figure into our journal entry. Okay. So that is it for problem 6-13A. If you have any questions or concerns, do not hesitate to contact me. I am here to assist you. And I wish all of you have a wonderful rest of your week. Until next time. Thank you.